Yo, what's up YouTube? It's Mr.BuyTheDip back here with another video. This video is going to be a bit long maybe, but I'm going to go ahead and get straight into it. This is for my beginners, all my young beginner investors, in high school, college, people that want to generate income on the side other than going to a job and clocking in, other than sitting at a desk for hours, right? This is a way to do it, okay? This applies for everybody, young, old, whatever. I'm gonna give you a real rundown of what investing is, different types of investing, okay? And then some things to know before investing in a company, in a stock, right? Investing in a stock is basically investing in a company, right? But you have to know a couple things, how to pick and choose good companies, all right? And I'm gonna let you guys look at some of my my beginning investing journey, like some of the stuff I was buying when I was a beginner, for example, Nvidia. For example, I'm gonna let you in on my S&P 500 investment, stuff like that. Okay, let's go ahead and dive straight into it. Okay, basics of investing. So investing versus saving, I like to compare this a lot, because when you save money, that money is just being stored in a bank account, or you can, take money out cash and put it in like a safe or something, but that money doesn't grow. Okay, so you need to understand, to make your money grow, you should put it into an asset. What is an asset? A stock, real estate market. You got something basically that's going to bring you money back when you put money in it. Okay, you need to learn about risk management. Obviously, it wouldn't be a smart idea if you're a younger person trying to invest, beginner trying to invest, take out all your savings, invest in one thing you believe is going to explode, right? For example, when I invested in Nvidia back in 2023, I'm going to go down to my history. Okay, as y'all can see, the last time I sold Nvidia was May, but when I invested in 2023, I invested with only $15, and slowly I started to learn more and put more money into this stock. Now, okay, you're putting money in a bank account, you get it's low risk, right? And you get a very, very low return. That bank is going to throw like 0.7 APY, something really, really small, where you're not earning as much interest. Investing is putting money in stocks, bonds, or other assets. What is an asset? Okay, asset is something that's going to bring you money back. Okay, you do this to grow wealth. You do this to get additional income. Okay, and a higher potential return. It says high risk right here, but that's not always the case. Okay, now the goal is to grow your money over time and beat inflation, because as you know, inflation is where inflation eats up your money. Over time, your money, a dollar is not going to be worth as much 10 years from now, if that makes sense. So getting more than 7% return on your money is kind of the goal to go for. Okay, so if I have money invested in something like the SPY, okay, I'm going to talk more about what this is, and I get a return, I want y'all to look down where it says total gain, 12.31%. Okay, I took $280 and I grew it over time. I put it in here. Okay, I just invested in here, and I'm getting $34 back right now, 34.5. Okay, that is a good return. 12.31% is a very, very good return. Okay, now you can be a long-term investor. That means you just invest in these stocks, invest in these bonds or these group of stocks for a long time, 10, 15, 20 years. Or you could be a short-term investor. You invest in it for a few months, get a nice gain, get out, okay? Or you can be a swing trader, where you just look for, it's kind of like the same thing as a short-term investor, right? Or you can be all. I like to do a mix of both, right? And the best part about this, you can sell at any time. If you're not in a retirement account, you can sell these investments anytime. So if I wanted to cash this out tomorrow when market opens at 9:30 a.m., okay, make sure you're aware of that. The stock market opens at 9:30 a.m., okay? After that, I can cash this out tomorrow, next week, next month, as long as it's Monday through Friday, 9:30 a.m. to 4 p.m., okay? Now, type of investments. So now that you realize how you can invest in different things to bring you money back as a beginner, okay, and we realize how we compare it with the savings account to actually investing in a different company like Nvidia or, for example, Walmart, right? Let's talk about type of investments. Stocks, okay? ownership in the company. Okay, profit comes from price appreciation. So if I go on here, okay, and I look up Walmart, everybody know what Walmart is, right? This is a grocery store, right? They're into they're into basically selling grocery food, fast moving goods. Okay, yearly they're up 29%. As y'all can see, I bought this stock right here, and this was called a swing trade, a short investment. I wanted some quick money. I bought when they dropped off to $94. Okay, $150 was put in here, and I sold at $156. So I made $6. As y'all can see, I'm catching a nice swing on the price. I'm buying low and I'm selling high. I only made $6 here, but I was practicing something, and that strategy happened to work out. Okay, so you can buy the stock either long term, short term, or you can do something like a day trade or something like options, which we're not going to get too much into that. Okay, so the key concept I'm showing you is I could have held that 150 a few more months and sold it for higher, or I could have took my profit whenever I want to. Okay, now the risk is a company can lose value or go bankrupt, and you lose the money you invest. This is very, very rare with a company like Walmart, right? So depending on what you invest in, the risk is based on that. If I'm investing in Walmart, or if I'm investing in a stock like Uber, or something that I believe is a little bit more stable, right? For example, Walmart is very stable and it's very strong. I could be long-term on it, and that is not crazy to say, because you can show me the yearly graph, and you can the yearly chart, and you can show me their business model, okay, and you can be like, you know what, this stock is a good long-term to have. Okay, as y'all can see, if I would have invested this starting from last year up until now, I would have been up 29.79%. That percentage y'all see is moving as I move across this chart. That is basically what you would have been up on your investment. Okay, now we talk about bonds. You lend money to a government company and you earn interest payments. Okay, this is also, again, lower risk. I don't go for this usually. Okay, I like something better than bonds. Bonds is safer. Mutual funds is also safer. An ETF, this is called an exchange traded fund. This is also safer. So if we talk more about an ETF, we're going to talk about this investment that I've made, which is called the SPY. It's called the S&P 500. It's one of the best investments you can make. And the younger you start, the better it is. The earlier you start, the better it is. As y'all can see, I only threw in $280, and I've grown this over the past year just to grow my investments. As y'all know now, I don't invest on Cash App as much. I'm on a different brokerage. I'm working with more money. But for all my beginners, you do not have to start with a crazy amount of money. Starting December 2024 is when I made a commitment that I was going to invest in this ETF for the rest of the year. As y'all can see, March, February, January, we go to December right here. I made a purchase on right here. I made a $50 purchase December 13th. And ever since then, all I did was buy. I bought every single month. I've bought a little bit. I bought a little bit, right? I bought a little bit. And doing that, I've always bought when the market was low, or I've gradually bought when I saw that the market is potentially going to go higher. Look at these buys I had. $10 right here, $10 right here, $10 or $4 right here. See? And then boom, $5 right there. Just adding a little bit of money, and this is a safe investment. Why is this a safe investment? Because we are not investing in a single company. The S&P 500 contains all of these companies. So if you go in the S&P 500, okay, you're going to see all the top 10 companies in the S&P 500. So instead of investing directly into the big dog, for example, Nvidia, let's say you want to invest in the S&P 500. You are still investing in Nvidia, but only 7.39% of your money is going to Nvidia. The other is going to Microsoft, then it's going to Apple, then it's going to Meta, okay? And you look at the sectors that are focused the most. So technology, you see, has a nice focus, which I like that a lot. Technology stocks move. They like to move, okay? Then you see consumer services. These are different industries. So when you're investing in an ETF, a safer investment. You're investing in a group of stocks. You're not just investing in one thing. You're buying a basket. It's like picking up a basket at Walmart. Instead of buying just apples, you get a basket of apples, bananas, pineapple, right? So when I invest into this ETF, I'm not only investing in one stock, I'm investing in a group of stocks, and that group of stock contains Nvidia, Microsoft, Apple, Meta, and the list goes on and on and on. Okay, now options. This is more advanced. So options, I'm gonna give you a brief rundown on what options is. Okay, it's basically where you give the right to buy or sell a stock at a certain price. As you get more advanced, I want you guys to move into options. Okay, so you're betting on the stock to move up to a certain price, and you buy a call option saying I'm gonna buy Walmart $90 call option that's going to expire in 2 years. So you're saying Walmart's going to be above $90 plus the amount you pay up front in 2 years. Okay, don't worry too much about number 4. I need you guys to just realize stocks, okay, ETFs, and realize the difference between saving and investing, and why you need to save money as well, but also invest. I hope this video is helpful for you guys, because this video is literally made for all my beginner investors, my young investors looking to build wealth young. You can do it in high school, middle school, college, elementary school. The younger, the better, okay? Because the more time you have, I want you to see something. The more time you have to let your money grow, the more percentage you're gonna get back. If I only got a month, to let my S&P 500 index ETF grow, okay, I'm only going to get back 2%. Look at that number right under the S&P 500, 2%. That's nothing. If I have a year, it's going to take my money to be up 18.5%. Now, if you take this from all the way back to 1993, okay, you're going to be up 1,380%. Okay, now you can cut that down in the middle to 2016. Okay, you can still see that you'll be up over 300%, which is a significant amount. All right, you guys, I want you to realize these key metrics are also very, very important. Before investing in a company as a beginner, look for these things. For example, if you like Walmart stock, or if you like the, let's say you like the Costco stock, Netflix stock, don't just invest without doing any research. Research is important, and then risk management is important. So on top of research, you want to take out some money, have some money saved up, and then invest the rest, okay? Net income. This is basically the total profit after expenses. When a company releases their earnings, basically, or they have, for example, let's say we see a company like Apple, right? Right here, I don't think you'll be able to see. Oh, you see net profit, right? You see net profit. That's basically some of the profit this company has made. Then you see the current price. The market cap is very important. If you see a market cap like $3.4 trillion, you're working with a big time company. Okay, compare that to a company like Lyft. Okay, 3.4 trillion in Apple compared to a company like Lyft, $7.47 billion. It is nowhere near as big as Apple. Okay, keep that in mind. Debt and cash. Check if a company can cover its obligations. Basically, you don't want to invest in a company that has too much debt. Invest in a company that has a good amount of cash. For example, Lyft is a small company, but does that mean a small company is a bad investment? Definitely no. As y'all can see, it's up 3.83% on the day. On the month, it's up 37%. Because it's a single company, it's up more than the S&P 500. Okay, and just being able to manage your risk is very important, right? This stock is up over 63% on the year. Okay, a crazy investment that would have got you nice returns over this past year. And when we talk about cash, this company also holds a lot of cash. Okay, dividend yield. If a company pays dividends, shows return from income. Dividend yield is basically a small amount of money that a company is going to give you back. So, for example, let's say I go to S&P 500 again, okay? If I scroll down and I see, sorry, the video had cut out a little bit, but 1.10% is the dividend yield on the S&P 500, okay? So I will earn this ETF will actually give me back some type of money. As y'all can see, I just reinvest those dividends. So they gave me back 77% just for me holding their ETF, and I reinvested those dividends. I hope this video was very, very helpful for you guys. If you're a beginner investor, comment down below. Let me know how you feel about investing. Let me know if this was helpful comparing savings to investing, comparing the percentages. You know, shout out to all you guys tuning in right now and trying to build wealth. This is the first step, and you took the first step in the right direction. Like, comment, subscribe. We are going to make money. I have a Lyft stock analysis coming up, so you want to tune into that. If you just watched this video, it's gonna